Hey everyone, and welcome. Have you ever looked at a chart and just wondered how the pros seem to nail market tops and bottoms with this crazy, uncanny precision? Well, today we're going to pull back the curtain on one of their absolute favorite tools, the TD Sequential indicator. This thing is a beast. It's built to anticipate turning points, not just follow them. So let's crack this code.
Okay, so here's how we're going to tackle this. First, we'll get into why the pros even trust this thing. Then, we'll break down its two main parts, the setup and the countdown. We'll dig into the specific rules for the 9 count, then the 13 count, and finally, we'll wrap it all up with how you can actually use this in a smart, practical way.
All right, so first things first, what is the big deal with this indicator? Why are these seasoned traders always talking about these numbers 9 and 13? Well, it's because this tool forces you to look at the market in a totally different way.
And this quote from the creator himself, Tom DeMark, just says it all, doesn't it? Think about it. Most indicators like moving averages, they're great, but they tell you what the trend is right now. They're followers. DeMark's work is designed to tell you when that trend is just about to run out of gas. It's all about trying to get there before the turn.
And the credibility this thing has with the pros, it's just staggering. I mean, listen to this. Kurt Magnus, a top Forex trader over at Westpac, he found it to be 70 to 90% reliable for spotting these turning points. I mean, come on, those are numbers you just cannot ignore.
So, why do they trust it so much? Well, just look at the guy who created it. Tom DeMark is a living legend. We're talking about a guy who has consulted for the biggest names in the game: George Soros, JP Morgan, Goldman Sachs. He was an executive VP at the legendary Tudor hedge fund. This isn't some indicator someone cooked up in their basement. This was forged in the fires of the highest levels of finance.
Okay, let's get into the nitty-gritty. How does this thing actually work? The real power of the TD Sequential comes from its unique two-phase process. See, it doesn't just flash one signal and call it a day. It actually builds a case for a reversal, piece by piece, in two very distinct stages.
And here's the most important thing to get. The TD Sequential is all about measuring two things: momentum, and then exhaustion. And it does this with totally objective black and white rules. There's no room for interpretation, it kind of looks like it's either a signal or it's not.
And here are those two phases. You've got the setup phase and the countdown phase. Think of the setup as the first warning shot. It's a 9-bar count that's looking for that initial shift in momentum. Then comes the countdown. That's the confirmation. It's a 13-bar count that's looking for much deeper trend exhaustion. It's like a 1-2 punch for spotting reversals.
Okay, so let's zoom in on that first phase, the 9-count setup. This is where the indicator first starts sniffing around, trying to detect if a trend is starting to lose its edge. Now, the rule for a buy setup is dead simple, and that's the beauty of it. The count starts when a candle closes lower than the candle 4 bars before it. That's it. If that exact same thing happens for 9, and this is key, 9 consecutive candles, then boom, the buy setup is complete. It's a purely mechanical count that tells you, hey, this selling pressure might be getting a little overdone.
And here's what it actually looks like on a chart. It's super clean. You can see the numbers just printing right on the screen, counting up with every bar that qualifies. For a buy setup, you'll see those red numbers pop up below the candles, ticking up from 1 all the way to 9. And for a sell setup, it's the green ones above the candles. It's just a perfect visual of that momentum shift happening in real time.
And a sell setup, as you've probably already guessed, is the exact mirror image. It's looking for 9 consecutive closes where each one is higher than the close 4 bars before it. It's the same logic, just flipped upside down for an uptrend that might be running on fumes.
All right, so the setup gives us that first heads up, but now we look for the real confirmation. And that comes from the second, and frankly more powerful phase, the 13-count countdown. And this right here is where the indicator gets really interesting. So after a 9-count buy setup is done, the countdown phase kicks in. Now it's hunting for 13 bars that meet a totally different rule. But the most crucial difference, the absolute game changer, is that these 13 bars do not need to be consecutive. And that right there is what allows it to measure a much deeper, more profound level of exhaustion in a trend.
So let's just sum that up to make it crystal clear. The setup, that's a short 9-bar consecutive count that measures momentum. Think of it as the early warning system. The countdown, on the other hand, is a longer 13-bar non-consecutive process. It's measuring true trend exhaustion, which makes it a way higher conviction signal when it finally shows up.
So what does it all mean? Well, when you finally see a completed 13 countdown, that's the indicator basically screaming that the current trend is on its last legs.
A pro trader sees that and thinks, okay, this trend is vulnerable, and a big reversal or at least a major move could be right around the corner.
So, knowing the rules is one thing, but how do you actually use these signals in the real world? Let's get into how the pros apply this stuff.
The number one rule, and this is huge, is that you never use this indicator in a vacuum. Pros use the TD Sequential for timing, but they always combine it with other analysis. They're looking for confluence, right? That's the magic word. It's where a 9 or a 13 count lines up perfectly with a major support or resistance level. And of course, they are always managing their risk and paying close attention to the overall market.
And here's the really cool part. Because this system is based on pure objective price rules and nothing else, it's totally universal. It works on stocks, futures, forex, crypto, you name it. And it works on any time frame, whether you're a day trader on the 5-minute chart or a long-term investor looking at weekly charts.
So if you only remember one thing from all of this, let it be this. The TD Sequential is a fantastic, objective timing tool. It gives you a real statistical edge by finding these moments of trend exhaustion. But it is not a magic bullet. It's not a complete trading system. It's one very, very powerful piece of a much larger puzzle.
And there you have it. We've just decoded the 9s and 13s that the pros use to get a jump on market reversals. So the final question for you is, now that you know how to spot this count unfolding on a chart, are you ever going to look at a strong trend the same way again? Thanks so much for tuning in.